Here comes an easy strategy in a weak market, guys. We're in a downtrend. Let's talk strategy. Here's what we're going to discuss in this video. Yeah, trend is, in fact, your friend. Understand when trend has changed. And do you have to trade? That's a good question. Know your strategy and your style. Let's jump right into things here. Sean's going to kick us off. Understanding whether or not we actually even have to trade, Sean.
Yeah, no, you don't have to. And I mean, we'll talk about the trend, but I want to just say stay in cash. I mean, if you're noticing the trend is to the downside, what you can do is begin to raise capital. And how you would do that is by selling your current positions, taking advantage of market bump ups in a downtrend. I have the S&P here, just going back to May, and this is the futures contracts of the S&P 500. When you're noticing this kind of a downtrend, you start making lower highs. This is just a daily chart. And then you break the 50 period. Sure, we've broken the 50 period a couple times here in the last couple months, but we've just retraced every single time. But here you hit it and you don't retrace. You actually start making new lows. So boom, 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 through the 50 period moving average, right? So what I look at here is why not? When you bump back up, you're always going to get some of these relief days in the market. So just like today, if you're nervous and the trend is going to the downside, why not take advantage today of this bump up and sell some of your, maybe your high growth stocks or some names that are, maybe not working out for you, and you get a bump up there to be able to raise some cash. So I think anytime the trend is against you and you get back to the 50 period moving average, it's not a horrible time to start selling some of your positions and raise cash and wait for those better opportunities.
Yeah, and from there, it's like if you don't have to trade, well, you don't have to actually buy until the trend is with you. And I want to use an example here of Uber, because Sean showed you the S&P was already in a pullback, but the Uber had been in a downtrend well before that, and it wasn't until the last couple of weeks that it actually broke this bottom. You don't have to wait for the bottom support, like, oh yeah, of course everyone wanted to buy this thing at 32, or maybe you have to perfectly pick that bottom at 38. Nah, don't worry about that. Allow the fact that the market was still coming down when this broke the 50 period moving average, had some positive news with a forecast, and then start playing the long. And if you wait until there's actually that upward momentum, then suddenly when you had the dip the last couple of days, here, that becomes that higher level of support. That is on the breakout standpoint when the market is relatively weak. So that's the other thing you can look for, is be patient. Buy on actual strength. Maybe you have to wait a while to get those breakouts or find something which is technically strong or stronger and reversing and when the market is going down, but it's going to be worth it when you do.
One but two ideas there, guys. In a weak market, the first thing we have to understand is when the market has actually changed and has gone from strength to weakness, and then understand exactly what that means in that some things that used to work when the market was just going up every day might not be now. So know and understand your strategy and understand what kind of market we are in. Here's Miss V.
Hey guys, thank you for sharing these trading strategies. Dear viewers, please subscribe to this channel to see more great videos.